In today's FX markets, I want to focus on the Japanese yen today. The Japanese yen, a big mover. We saw most of the major currencies moving quite a bit. The British pound kind of staying within a range, but other majors certainly moving when we look at the euro, the Japanese yen. And again, we're seeing a third straight day now of significant selling pressure, really, when you look at the Japanese yen. We're looking at the current these future right around the spot 0.09185 level. So that's the low end of the range. Not only for the last week or so, we did see some volatility around that Fed announcement where we saw the Japanese yen temporary spike lower, then rally for the last week, and now with this selling pressure. But now with these levels today, we are going back to levels that the Japanese yen really hasn't attained since late May. So we are seeing some definite selling pressure on the futures currently. And when you look at some of the driving factors here, I think you got to point right to the Fed. Again, the Fed continues to roll out their narrative. I think you're seeing the repercussions of that Fed announcement last week. Now the Fed appears that they're going to be on hold for quite some time, and you're seeing the market adjust for that thought process and that pricing pressure moving forward. And also today we had an ISM non-manufacturing number that really reversed the previous number. And if you think back a month ago, it was that ISM non-manufacturing number that really sparked the sell-off in the equity markets for about a week. And we saw again when we saw yields come under some pressure, and we saw again that flight to safety, and that's when we saw some of the currencies like the Japanese yen benefiting from that. But now we're seeing that being priced back out of the market. The number this morning in the ISM non-manufacturing number much stronger than expected. So again, shifting the momentum back into that growth type of mindset, and we're seeing it play out in the equity markets. We're seeing it play out in the interest rate markets, and I think that's another factor why you're seeing the yen continuing to realize some selling pressure. Also, the other thing that's underneath this market and continuing to benefit the current environment from an economic structure are the trade talks, and we continue to see a positive storyline developing there. Again, the conciliation appears to be at least somewhat in order as we move through this current negotiation, and we're seeing headlines hitting the tape here throughout the day that indicate that they are willing to negotiate, take steps to try to get something done. Not to say that it's all positive, but we are still trending in what appears to be a positive direction. And I think with those factors in the marketplace right now, being priced into the marketplace, we're seeing again the yen coming under significant selling pressure because that safe haven type of mindset is getting alleviated to some degree from the markets, and why we're seeing the US dollar bouncing back sharply, and we're seeing the yen and also some of the other risk off type of assets, REITs, metals, and utilities all coming under significant selling pressure today.